We are pleased to host the top management of the company. Today we have with us Mr. Dinesh Nolkha, Promoter and Managing Director of Nitin Spinners, and Mr. P. Maheshwari, Chief Financial Officer of the company. We will start the call with initial commentaries on results, and then we will open the floor for question and answer. Now I will hand over the call to Mr. Nolkha, Managing Director of the company. Over to you, Dinesh sir.
Thank you, Abhijit. Good afternoon and a warm welcome to all the participants to the investor meet post our annual financial year results of Nitin Spinners. I hope you all are keeping safe and healthy. I have with me Mr. P. Maheshwari, Chief Financial Officer of Nitin Spinners. I hope all of you must have had a chance to look at our investor presentation that is uploaded on company's website as well as stock exchanges. Nitin Spinners is India's leading manufacturer of cotton yarn, blended yarn, knit fabrics and woven finished fabrics. The company's leadership in cotton and blended yarn and fabric manufacture is driven by delivering international quality standard products with a continuous investment in the latest technology. We have achieved highest ever revenue of rupees 2,692 crores, making a growth of about 66% along with highest ever profitability during this year. We have almost doubled our exports during the current year as compared to previous year. We are contributing deeply to the nation's textile exports. We are not only expanding our business with existing customers, but are also improving our clientele by associating with renowned global and domestic brands. All our factories are operating at nearly optimum capacity. We are strategically enhancing capacity in all the segments, that is spinning, knitting, woven fabric, to meet the increasing market demand. In this, we are also increasing our blended yarn production capacity substantially. This expansion shall take place with a total project cost of rupees 955 crores, which will be funded by term loans as well as international loans. We aim to capture the benefit of growing market opportunities in international as well as domestic markets and strengthen company's position by widening their product portfolio as well. This project shall be eligible for the interest subsidy and other benefits under the Rajasthan State Investment Promotion Scheme. The expansion project, as informed earlier, is also progressing as per schedule. Nitin Spinners as a company is having distinctly differentiated brand image and is known for long-standing customer relationships and globally accepted quality standards. Our unique R&D for developing value-added products has led to value creation for both our client base in domestic and global markets and made us a preferred supplier to them for a long time. Nitin Spinners are geared up for upcoming year with all the positivity in spite of unprecedented time and input price challenges. With our differentiated strategy marked by innovation and sustainable practice, we will strive to maintain our top-line growth momentum, optimizing our capacity utilization and thrust on value-added products. I shall now hand over the call to Mr. Maheshwari to give you the operating and financial highlights for last financial year as well as the Q4.
Thank you, sir. Good afternoon, everyone, and thank you all for joining the call. I would like to share operational and financial highlights for the quarter and year ended 31st March 2022. Revenue for the Q4 FY22 increased to rupees 769 crores from rupees 512 crores in Q4 FY21. That is an increase of 50% on YOY basis. The full year revenue stood at 2,692 crores as compared to 1,624 crores in FY21. That is registering a growth of 66% on yearly basis. This has been our highest ever turnover. Apart from operational efficiency and value-added products, increased selling rates due to higher raw material prices also resulted in higher revenue. EBITDA for the quarter stood at rupees 167 crores as compared to rupees 104 crores in Q4 21. that is a growth of 61%. For the whole year, EBITDA stood at rupees 652 crores as against 257 crores in FY21, that is a growth of 153%. EBITDA margin for Q422 is 21.8% against Q421 margin of 20.4%. The full year EBITDA margin stood at 24.2% against last year 15.8%. Good international demand coupled with operation efficiencies and validated product resulted in better margins. The company has reported PAT of rupees 86 crores during the quarter as against rupees 43 crores in Q421, that is a 99% growth on YOY basis. And the full year profit after tax is rupees 326 crores against rupees 69 crores in FY21, that is a growth of 374%. Earning per share for the year is rupees 58 per share against last year 12.25 per share, and cash EPS for the year is 73.56 per share against last year rupees 28.44 per share. The board has recommended final dividend at the rate of 25%, that is rupees 2.50 per equity share. The aggregate dividend for the year is rupees 4 per equity share, including interim dividend of rupees 1.5 equity share per equity share. During the year, we have produced 71,850 metric tons of yarn as against 63,973 metric tons in last year. Out of the yarn produced, about 24% yarn is captively consumed in knitted fabrics and woven fabric division. Knitted fabric production was to the tune of 8,057 metric tons during FY22, while it was 7,375 metric tons last year. Woven fabric production for the year was 269.47 lakh meters against 234.81 lakh meters in FY21, and the finished fabric production was 213.73 lakh meters in FY22 against 143.02 lakh meters in FY21. That's all from my side. Now I open for questions and answers.
Thank you so much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Yogansh Jeswani from Mittal Analytics. Please go ahead.
Hi, thanks for the opportunity and congratulations on a good set of numbers, sir. We are seeing cotton prices have shot up very high and the yarn prices have also moved up, but then there were some articles that yarn prices have also not moved up in line with the increased cotton prices. So currently, what kind of spreads are we seeing between yarn and cotton? And how have they behaved compared to Q4 and Q1?
You're very right that the cotton prices have shot up substantially. The cotton prices are now around 1 lakh rupees per candy, which was coming at about 80,000 rupees a candy in last February. So definitely there is a substantial increase, and rightly mentioned that cotton yarn prices have not moved in tandem as the cotton prices have moved. Really, this increase in prices is more or less speculative due to shortage of cotton in the country, and yarn prices are moving ahead, but not moving to the tune what the yarn raw cotton is moved, and practically with a lag effect of about 1.5 to 2 months, it is moving ahead. So at this point of time, for normal margin, we were able to pass on the prices till 88,000 rupees a candy. So still that's a lag of about 25-30 rupees a kg still to be passed on to the customers.
And this year saying 25 to 30 in Q1, right? This is still due to be passed on.
Yes, exactly.
Okay. And so now, given the kind of rise cotton has seen, of late what we are noticing is most of the companies' inventory of cotton has doubled from what it was last year. A lot of it because of the higher price, and also a lot of them have stocked up cotton. While in our case, we see the increase in absolute value of inventory is hardly 50 odd crores. So could you share some insights on what is the management thinking behind this? Why do we have a lower cotton volume in terms of the year end?
Normally, at the end of the year, we stock as per our order book position, which is about, depending on the order book, about 3 to 4 months. But this time, we could not book so much of orders because of different difficult geopolitical situation happening in Ukraine and Russia. Due to this order book, people were scared to book the very long-term orders. So we had short-term orders, and accordingly, our inventories were also accordingly kept with us. So we had, at the end of the year, about 2 months inventory, and accordingly, the orders were also for that much.
Okay. So, sir, are we seeing this demand picking up now, or are we still facing any challenges here in terms of order book? Are we seeing more inquiries now?
In terms of inquiries and orders, actually, normally, most of the customers used to book orders in the month of February and March for next 4 to 5 months, as per the fashion season of the product. So, but because of this war-like situation, and also COVID happening in China, people were scared to book very large orders. So they are booking on a monthly basis. So we are getting the orders on a monthly basis till now. Now people are thinking that maybe this can continue for a longer period of time, and they have to also run their factories and also run their businesses. So now the orders will start to look up. But inventories, people are more or less utilizing their own inventories to the maximum possible and reducing plus this costs also increased substantially. So everybody at these higher prices of raw cotton and higher prices of cotton yarn were slightly scared to buy a very long-term order.
Right. So, sir, are we seeing any challenges in terms of our utilization now on a monthly basis, or the orders are sufficient to keep the utilization at 90%?
At this point of time, we are not facing any challenge for utilization of our capacity. That is still going on at full capacity.
All right. So last question from my end. Given the huge cash flows and the fantastic execution that our company has done over the last 2 odd years, we have created good cash flows and have repaid a lot of debt. So I was just looking at your balance sheet numbers, and from 1,000 odd crore debt level in 2020 to now some less than 700 crore debt we have. But if I look at the actual finance interest outgo, it is somewhat similar. So we paid out around 55 crores in FY20, then 62 odd crores in FY21, and this year again it was still 55 crores, while our debt has reduced by 30%. So what explains this difference?
Here, some interest like interest on income tax and others, which got paid during the last financial year, had to be paid up. So that is amounting to about 2.5 to 3 crore rupees. Also, we have seen that certain interest subsidies which was due, some small amount of interest subsidies which was due from the TUF was not forthcoming, which was very old. So that was also written off. So that all that put together, this interest cost is slightly higher than what it used to be. Now, in the normal circumstances, this should have been means we are saying this is about 56 crores. This should be in the range of about 50 crores. 4, 5, 6 crores are the costs which I have just mentioned.
Okay, that's helpful, sir. I'll get back on the queue. Thank you.
Thank you. We take the next question from the line of Kaushal from Valco. Please go ahead.
Yeah, hi. Hi, congratulations for a good set of numbers. I just want to understand what was your capacity utilization in 2017, 18 and 19 on an average basis. Can you help me with that?
I will not be having the data of last 17, 18 and 19 actually with us at the moment.
Okay. And currently the capacity is running at what level?
Currently capacity, like our spinning capacity is running at about 96% utilization level. For last financial, I'm talking about last financial year. Our weaving capacity is being utilized at about 95%. Our knitting capacity is being utilized at 85%. And our finished fabric capacity is being utilized at about 83%.
How much of knitting? I'm sorry.
It is about 85-86%.
Okay. And in the previous question, what you mentioned, sir, you mentioned that 25 to 30 rupees per kg price is yet to be passed on in tandem with the increase of cotton prices, right?
Yeah.
So that's about roughly about 8 to 10% increase you've not taken, whereas cotton has increased by that much.
8 to 10%. The yarn prices are in the range of about 400 rupees plus. So if it is about 25 rupees to be passed on, it is about 5 to 6% of the yarn price.
Okay. And sir, I just want to understand, do yarn manufacturers in the entire sector, is the pricing power slowly shifting to them because there has not been major capacity additions in the last 3-4 years? And from what we understand is that one cannot add more than 2 million spindles going forward for the next 3 to 4 years. So is the pricing power really in the hands of the yarn manufacturers? Is it shifting? Like if you compare the last 5 years and the situation currently, is it shifting?
Means I could not cannot answer this question emphatically. We'll have to see this coming up year whether the prices have changed, because for last, if you see the history, last year the cotton prices when we started the financial year was about 47,000 rupees a candy. Now it is 95,000 rupees a candy, and the yarn prices was about 240 to 250 rupees a kg, which is now 400 rupees a kg. So definitely spinners were able to pass on the prices. However, our downstream industry in the fabric, in the apparel fabric manufacturing, in the, I would say, home textile industry have not been able to pass on these kind of prices. So, but as we all know, when these kind of company, when this kind of increase happens of 60-70% increase in the finished good prices, it takes time to pass it on to the retail customer. So the year which is coming up now will decide whether this shift is for us, have been shifted permanently for us, or still the downstream industry will play an important.
Okay. Sir, and just from the capacity utilization question, coming back to it, you don't have the numbers, I'll take it from maybe the investor relationships people later. But is the capacity utilization for FY21-22 better than the capacity utilization for FY17-18-19, just on an average basis?
Yeah, of course, it is better. We have seen an increase of, we had some stoppages due to COVID in year 2021. Also in 21-22, we added some more capacity. We had some debottlenecking done. So accordingly, our production is up by about 12%. Our yarn production last year was in the range of about 63,000 tons. Now it is in the range of 72,000 tons. Definitely, production has increased there as well.
So that was mainly due to demand in the last 1 year. Because demand was strong, was stronger than what was.
Basically, we have been utilizing our spinning capacities to the full level. 95% plus is the norm in our spinning industry to utilize to that level. So, barring unforeseen circumstances when during COVID, the production was stopped. So it is more related with improving on efficiencies, debottlenecking the plants, and adding some different kind of products in the basket. So that actually has improved our productivity.
Sir, also I just want to understand one more point to understand the industry better. If cotton is primarily used for spinning, cotton is not used for anything else. Majority of the cotton produced in the world is used for spinning. So if cotton prices increase, why can't we increase yarn prices in tandem to cotton prices?
Definitely, we have been increasing. It is demand and supply based situation. If the production of the cotton is less than the consumption of the cotton, then the cotton prices basically, and also the speculative element to it. These are all listed on the exchanges. Even in India, we have it on MCX. In US, it is on ICE. Various other countries are also having exchanges to deal with. And speculators and hedge funds enter into this kind of product and create their positions, which artificially increases the prices many a times. So, which is actually, ultimately our customer is ultimately retail means basically the normal masses is our customer. So, we need to increase the cotton prices, then yarn prices, and then ultimately the finished good prices. As we all know, with the chain going ahead, it takes a bit more time in passing on those prices. But most important thing is, once the prices are passed on to the end customer, they are irreversible. Normally, we do not see anything, the fabric or cloth prices coming down once it is passed on. So that is a permanent advantage to the whole industry once it is passed on. So as such, it takes, we should, as you say, mathematically it should be possible for us to pass on, but practically it takes slightly more time than what we should thinking. Also, we should also consider that overall as a cotton industry, we have a total inventory of about 8 to 9 months in the system, from once as the fiber starts till the finished goods is sold. So always this inventory is flexible to moving. Sometimes it moves up to 11 months, sometimes it goes down to 6-7 months, depending on the prices of the product. So accordingly, that is also one of the factors which plays an important role in deciding the final prices.
Okay. And so the expansion the expansion will kick in when the expansion that you announced in January?
Expansion we have here, as I mentioned, we are expanding in various or most of the segments. So this will part of our weaving and finishing capabilities as well as knitting capabilities will start to come up in Q4 of this financial year, part of it. And spinning capacities will start in Q1 and Q2 of FY23.
Q1 and Q2 of FY20?
24, sorry.
24. Okay. And this 900 crores will be funded, you said partly by internal accruals and partly by debt, is what you had mentioned earlier.
Yes, exactly.
So what do you see the debt number as by the time we start FY24?
By the end of FY24, we are expecting that we should be, 1:1 debt equity we are seeing, and we should be having a debt of about 1,200 crores in all, inclusive of our all working capital and others.
1,200 crores, inclusive of working capital?
Yeah.
By end of FY24?
Yes, not FY24, when the project is complete.
Okay, not end. Okay.
At the moment on FY22, our total debt is about 688 crores, which was 960 crores. This will add another, will repay, and then we'll add some for working capital and others. So total will be 1,200 around.
Around 1,200 crores. Okay.
Yeah.
Okay. Thank you.
Thank you. We take the next question from the line of Kirti Jain from Canara HSBC. Please go ahead.
So thanks a lot for giving the opportunity. Congratulations for excellent set of performance which you delivered. So can you highlight what are the product mix related changes and product mix related improvements which we are bringing in our company in the recent times?
Basically, in product mix, since we have also started to manufacture, first of all, our own woven fabric. So all the fashion related items with the woven fabric, the yarns which are related with it, are being produced in-house. So that has actually helped us in improving our product portfolio. So there are various kind of products wherein we have sustainable fibers being used in this. Also, we have been in our blended yarn segment, we have been able to use our sustainable recycled fibers, recycled cotton, organic cotton, and various kinds of different mix of fibers like viscose, modal, all those kind of mix is being used in our product mixes. So that is one part which we have started to do on the raw material side. On the product side, we have tried to optimize our product portfolio, looking into the fabrics which is being sold all over the market. Since we have an insight as a fabric manufacturer ourselves, we can preempt some of these manufacturing of those yarns, and that helps us in keeping an edge over other producers.
Okay. Sir, what would be our proportion of blended yarn, sir? Roughly?
At this point of time, roughly our blended yarn is about 12% of our total production.
Okay. So will it increase the given cost?
Yes, of course. With our expansion going up, this should go up to more than 20% levels going forward.
Sure, sir. So anything you can highlight about our medium-term business strategy, sir, apart from this next capex for 18 months? Anything you can highlight about medium-term capital allocation strategy?
Like, as you have seen in past, we have been continuously investing in the various technologies. So we our objective was to create a size in any business which we follow. So that is one of our most important USP. We have tried to, in export business also when we started, we looked at reaching a level where we can go ahead. So what I wanted was that we want that overall, whatever businesses we pursue, we reach a leadership position in the maximum number of areas where we operate. So that is our strategy going forward. So we'll keep on adding some capacities, reasonable capacities, exploring and widening our product portfolio to enhance the growth of the company.
Sure. Thanks a lot for the question.
Thank you so much. Before we take the next question, the participants are requested to kindly restrict their questions to 2 per participant. We take the next question from the line of Prerna Jhunjhunwala from Elara Capital. Please go ahead.
Thank you, and congratulations on good set of numbers, sir. So I just wanted to understand the demand scenario from the domestic market as well as international market perspective, given the changes in the raw material pricing scenario, and how is the profitability change between these markets?
As you know, the raw cotton prices in India are higher than the international prices. So definitely there is a challenge in terms of passing on the prices internationally. It is easier for us to pass on the prices in the domestic market because the domestic market has basically is buying the domestic yarns and which is priced at par with the cotton. So that is one part of the question that so domestic yarn is definitely at the moment better than the international yarn prices. In terms of how this is changing and how this is going to happen is most of the international buyers, the changes in their strategies, changing from China and coming to various countries like India, Indonesia, Sri Lanka, Bangladesh, they have to look for alternative sources of yarn, which is available at this point of time. Since no additional capacities, as I also informed in my earlier conferences call, that is not forthcoming in the manner in which they would like it to be. So they have to buy from these from countries like India, but they have slowed down on it because of such a huge or steep increase in the yarn prices. This is also one of the reasons why there is a slight slowdown in the increase in the yarn prices. Since the requirement is now tapered off, of course it is getting lifted. There is not a position that the yarn is not getting lifted, but it is slow than what it was earlier.
Okay. And so, just to follow up on this only, China plus one story, given that, US President is looking forward to rationalize the incremental tariff structure to China. Is the China plus one story at risk at this point in time?
Yes, it is. Basically, there is a change in the most of buying pattern of most of the international brands. They have already shifted quite a lot of their capacities to other countries than China, and that is the reason why China, if you can see, is not importing cottons as well as yarns to the tune what they normally do. So that is so practically, officially, they do not declare any production data or something like this. But we are seeing that they have reduced their production capacities. So that is being diverted to other countries.
Okay, so this shift is permanent, irrespective of what happens in China. Is what we are coming to as a long-term conclusion on the international market strategy.
Yeah, we expect it to be long-lasting. Definitely, we expect it to be long-lasting, and definitely that the business dynamics has definitely changed. Yes, we have to compete still with countries like Bangladesh, Vietnam, Pakistan, Sri Lanka, Turkey. So we have to compete with these countries. So we feel that we are competitive. India as a country is overall competitive in textile in comparison to most of our peers.
Oh, understood. So the second question is on the blended yarn business. You expanding capacity in the blended yarn category. How is the demand and outlook there? Is the shift from cotton to blended yarn looking more long-lasting and the profitability higher there? And how much of the spindleage that you are setting up it will be dedicated to blended yarn?
Yeah, first of all, we will be adding about 45,000 spindles out of the total capacity of 155,000 spindles which we are adding. So that will be dedicated. We have at this point of time about 28,000 spindles being dedicated to that part. So practically we'll be adding 1.5 times the capacity there. As far as profitability and the demand is concerned, as the prices of raw cotton has gone up substantially, the delta between the polyester fiber or the viscose fiber to the cotton has substantially changed. This has prompted the blends to change substantially, first of all, so that the cost can be maintained for the customer. This is an important part where the finished goods prices can remain at a reasonable level and customer can get the goods at reasonable level by changing the blends. That has prompted the use of the man-made fibers, and most of the products at the lower end is being used with the blended yarn. Now coming to the built-up in the future capacities, we have seen that the polyester fiber as well as viscose fiber have the properties have improved considerably during last, I must say, 3-4 years. We have seen that a lot of new finishes, a lot of new product development has been done by the fiber supplier trying to reach near cotton. So wherever there is not a compulsion of cotton being used, people are trying to shift to polyester cotton or let's say modal cotton or other kind of fibers, which is helping the blended yarn industry to grow much better.
Okay. And how the profitability difference between cotton and blended?
Profitability, since the customer is able to, basically our customers are able to buy them at a reasonable price to adjust to their cost, it is always better. At this point of time, it is better. Of course, if you would have talked to me 6 months back, cotton was much better.
Okay. Thank you so much, sir. All the best for future in this challenging time.
Thank you.
Thank you. We take the next question from the line of Roshan from B&K Security. Please go ahead.
Yeah, thanks for the opportunity. So, how is the demand situation and export outlook for USA panning out?
For US?
Yeah, US.
Basically, we have a limited exposure in the US. We export some yarns and some fabrics there, which is very nominal. We are doing about 6 to 7% of our total capacity. There, the demand is good, and we are seeing consistent demand coming in. Since cotton prices internationally is governed by the US futures, the prices also have moved up in tandem in the US. We do not foresee any major issues there till now.
Okay. Thanks a lot. And with the capacity increase on the spindle side, do you envisage that the capacity growth could exceed the demand?
As one of the participants earlier mentioned, not major. If you see the total capacity which is being added up in the country is about 2 to 2.5 million spindles every year, and we have a capacity in India of about 50 million spindles. Practically, we will be adding only about 4% of the capacity. There are also some scrappage of the old spindles also, which I am not considering at this point of time. So the increase in capacity is not very substantial, which may affect the demand-supply scenario.
Okay, thanks, sir. That's all from my side. Thank you.
Thank you. We take the next question from the line of Yash Bajaj from Lucky Investments. Please go ahead.
Hi, sir. Congratulations on a great set of numbers. Sir, I actually missed the part of the capex plan which you have laid out. Can you just repeat that if it's possible?
Yeah. Basically, we have announced the capacity expansion during our after our last earnings call. So that is to the tune of about 955 crores. This will be funded by 300 crores of internal accruals and 655 crores of debt. The capex cost is about 860 crores, and the balance is the margin money for working capital. For this, we will be adding capacities in our spinning department, in our weaving and finishing department, and knitting department. We'll be increasing our spindleage from 3.32 lakh equivalent spindles to about 4.88 lakh equivalent spindles, increasing our capacity from 75,000 metric ton to about 1,09,000 metric ton per annum. Similarly, our knitting capacity as well as our weaving capacity will also be ramped up by about 35% each.
Okay. And sir, I just wanted to know what was our average cotton price for Q4?
For Q4, our average cotton price. Maheshwari, can you highlight on this exact number?
Q4 average cotton price was 215 per kg.
215. Yeah. Okay. And sir, if I compare, if you compare how the demand is flowing currently in this year and as compared to suppose 2017-18, where is the incremental demand coming from domestically and in export?
Basically, incremental demand, what we are seeing is in domestic market. We are seeing that a lot of orders for the garments which was earlier being produced in the countries like China, also to an extent in Sri Lanka, are getting now shifted into India. So the garments actually needs more yarn. So demand is more at this point of time in the domestic market in comparison to the export market.
Okay. And going forward, considering the the way the cotton prices have increased, like you said that you will be increasing your concentration of blended yarn to 20%. So, do you see the end players in the value chain also changing their preferences from cotton to blended yarn?
There is, I think, a lot of investments in India is coming up in the PLI, which is primarily for man-made fiber yarns and blended yarns only, which will be using fabric, actually man-made fabrics and blended fabrics. So they will be using more capacity, more yarns for these purposes. So that should help us. So we are seeing that there is a total investment of about 19,000 crores happening in this segment. So that should help us in this segment as well.
Okay. Thank you so much, sir. And all the best for the future.
Thank you.
Thank you. We take the next question from the line of Neeraj Mansinka from White Pine Investment Management. Please go ahead.
Yeah, thank you. I just have two questions. One is on the export market. So we had seen a lot of slowdown in the export of home furnishing or home textiles from India in the cotton side. Do you see, because of the excess inventory pile up, so have you seen a slowdown in the consumption of cotton yarn from you for customers trying to export home textiles to the US market?
Actually, if you see our profile, our 70% of our yarn is exported out. Only about total 72% is exports and about 28% is domestic market. And we have spread it pretty well in the various domestic with our customers. We are not very much dependent on one particular industry or one particular company as such for sale of our product. So we are not seeing any major changes. Yes, if there is some lesser demand from some of the companies, then we are able to fulfill it by supplying to other companies as well. So that is a flexibility which we have in our system. However, as per your, as you asked, I don't think there is a reduction in the exports from these downstream industries. Their margin is affected, but their production, they are running at full stream. As I have given to understand, till the month of April, I'm given to understand that most of the players in home textiles are running full stream. Of course, margin are impacted because they are not able to increase their prices to their expectations.
Okay. And the other question is on the capacity capex. Just wanted to know your thoughts that you are seeing a lot of growth in the non-cotton side because of PLI investments. So why not have significantly more addition of the blended yarn new capacity rather than only the cotton side? Just wanted to know your thoughts on that.
Yeah, we are seeing a reasonable growth, and we are also adding up the capacity. We are already nearly adding 150% of our existing capacity. And we are also increasing our capacity in the cotton yarn business. Since we are trying to widening our product portfolio. We are going to add most of the yarns which we are not producing. There are many kinds of cotton yarn which we are not yet in production. So those will also be taken up. So this we have basically strategically seen that we are not competing against our own existing production and trying to add capacities in cotton yarn business also wherever it is desired, wherever there is a demand. So looking into that, the capacity for cotton yarn has been considered. For polyester cotton or let's say blended yarn as well, we have also considered various capacities, but let this PLI also fructify. Let us also see how the demand moves up. Till now it is good, so we are also adding capacities, and if required, we'll add further capacities in this segment.
Okay. And what are the carrying cost of your inventory for cotton in rupees per candy?
We do not calculate the carrying cost actually. Because our working capital is for the whole company and not only for cotton. We also have finished goods. We also have work in process. Also have debtors. So we're not exactly calculating carrying cost of the.
No, the reason I was asking is that optically the yarn margins may look depressed based on the current raw cotton prices. But because entire industry's inventory price is much lower than the current prices, don't you see this current yarn prices to continue for next 2 or 3 quarters, but profitability would remain similar to this quarter? So I just wanted to know your thoughts on that side.
Basically, yes, you're right that the cost of our inventory which we are carrying is lesser than the market price which is prevailing. Since there is a consistent increase, there is a one-way traffic. We have seen the cotton prices gone up from 75,000 to lakh rupees a candy. So definitely, whatever you have purchased during last 3-4 months will have lesser cost only. Definitely, that is there with every industry player. But we need to pass it on. We kept on passing in on the prices, which has slowed down. Since earlier, this was moving. The yarn prices were moving exactly in tandem. Now this is moving with a lag effect. If you go back in 2018, 19, 17, there was also a lag effect. Yes, but in calendar year 21, we saw that as soon as the cotton prices increased, yarn prices increased. And in some time, yarn prices preceded cotton prices increase as well. So that has resulted in a different kind of margin scenario. Now, with this lag effect happening, it will depend, the profitability will depend on the kind of order book which you have, and also the kind of inventory cost which you have. So it may vary from player to player. Also, as such, this increase if it is being taken by the downstream industry players, is going to be very, very good for the textile industry as a whole. If this kind of prices we are able to, this kind of raw material prices, if we are able to pass it on to the customer, then once these are passed on, these are irreversible. Yes, the yarn prices may come down, cotton prices slightly, or all these things can happen. But overall, the margins of the textile industry will definitely improve.
Got it. Thank you very much.
Thank you. We take the next question from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Good evening, sir. Thank you for the opportunity. So can you tell me the realization per kg for the yarn and knitted fabric, and the realization per meter for the woven fabric in Q4 FY22 and Q4 FY21?
Maheshwari, can you give the exact numbers, please?
Yes. And in Q4, the average yarn realization was 400 rupees per kg, while this was in Q4 21, 270 per kg.
Sorry?
270 per kg in Q4 21.
270 per kg.
380 per kg during this quarter, and while Q4 21 it was 298 per kg. Okay. In woven fabric, it was 171 per meter during the quarter, while it was 133 per meter in Q4 21.
Okay. So sir, like basically your cotton prices over the last summer, they've increased by almost been doubled, but your yarn prices have not actually doubled. It's increased approximately 50%. So do we see yarn prices increasing further? Like you said that about 5 to 6% of the cost is yet to be passed on. Is there space for more?
At this point of time, it looks that I was talking in terms of the cotton prices which was there at the beginning of the beginning of this calendar year until now. That is what I am talking about. So the scope will be determined by the downstream industry. Means if they are able to pass it on to their customers, then definitely we will be able to pass it on to them.
Okay. So, but any reason why like cotton prices have doubled, but your yarn realizations have increased by about 50% only? So
it is about 60. It is an increase is about 60% plus. If you see on a quarterly basis, the increase is nearly 60%. So cotton prices are like 55% of our raw cotton is about 55 to 60% of our total cost structure. So if it is 100%, means it is about 50% only for the sales price. So rest all is additional margins and some additional cost which has been passed on.
Okay. Got it. So, like, where do you procure your cotton from? Like, what category of cotton? And will you be importing cotton going forward as we all know that the import duty has been cut? So, will you be importing cotton as well?
First of all, I would like to bring to all of your notice that there was no import duty in India on cotton for last 10 years from 2011-12 till 2021. In the February 21, this duty was imposed and then it was removed in the April of 2022. So, as a spinner, we have been importing cotton for last several years in a significant manner. Even when the duty was there, we were already importing cotton under advance license, even that point of time. And still we are importing. Yes, the quantity has been substantially increased because we foresee that there is a shortage of cotton in India. So we have been importing quantities in substantial manner.
Okay. And so, like, any percentage of what percent of cotton do you import, like, of your requirement?
For confidential reasons, I would not like to share this particular data.
Oh, okay. No issue. So just one last question. Any guidance on the margin outlook and the revenue outlook growth?
Yeah, the situation is very fragile at this point of time. As I highlighted in my earlier conversation, that the situation is really fragile. We are, at this point of time, we are seeing that there is a shortage of cotton in India, due to which cotton prices is spiking up substantially. Even on a week-to-week basis, this is increasing, which is very worrying for all of us because we cannot change prices on a weekly basis with our customers. So the margins at this point of time, we would not like to comment on the margin side. But yes, we are working to see that we maintain or try to see a reasonable margin going forward.
Oh, okay, sir. So just one last question. You had mentioned the number of spindles you have dedicated to blended yarn currently. I missed the number. If you could repeat that.
It is about 28,000 spindles.
Oh, okay. Okay. Thank you, sir. That's it.
Thank you. We take the next question from the line of Abhishek from Kent Private Limited. Please go ahead.
I would like to understand how the cost of cotton has impacted, how the cost of power has impacted the industry.
Cost of power, basically, for us at least, this is not impacted at all since last 1 year. It is going to be impacted now once the tariff is increased by the state electricity boards. For us, it has remained consistent for last 1 year. In fact, with some renewable power being installed by us, it has come down only for us. However, and we had a coal-based power plant which we were using to generate power. Since we had scrapped that particular plant in last financial year and stopped using the power, so that has in fact saved us some amount on the power side itself.
And was Sri Lanka a major market for you because of the ongoing disturbances in Sri Lanka?
Not substantially. Yes, we are having exposure in Sri Lanka, and just for information, that Sri Lankan government as well as their central bank has allowed to most of the textile companies who are re-exporting their products to import the various requirements which they have, and the working is happening as per schedule.
Thanks a lot for your comment.
Thank you. Before we take the next question, we request the participants to restrict their questions to one per participant. We take the next question from the line of Ragesh from NR Family Office. Please go ahead.
Yeah, hi, very good evening, and thanks for the opportunity and an exceptionally good FY22. Congratulations on that. When I go through the P&L, what I see is the volume of growth has not been aggressive. So, however, the revenues have been really very aggressive. So, I just want to understand what could be the volume and the revenue outlook, from a 12 to 36 months perspective.
Basically, as we are saying that volume, we are consistently producing. Our spinning capacity is nearly fully utilized, so that will continue to be utilized going forward. But any additional capacity that will come up only from financial year 24, Q1 of financial year 24 and Q2 of financial year 24. And we are expecting that in 24 months from now, we should be running, we should have increased our capacity by nearly 45% on the yarn side. So, which is our major revenue earner. As far as our woven capacity is concerned, that is now running at about 90%, which we are trying to further ramp up. We are trying to increase the capacities there, which will be fructified during this financial year itself. And there also we are adding capacities to the tune of about 30% plus. So that is again going to play an important. That should be available for us during next full financial year. Knitting capacity is also running at about 85% capacity levels, but this keeps on fluctuating depending on the demand and supply of the kind of fashion products. So this will this should be the base case for the rest of the year. But once we are added up the capacity, we expect another 30% increase there itself also. This is all in the terms of volumes which I'm speaking.
Yeah. From a 3-year perspective, could there be a CAGR, you could put to the volume as well as the revenue growth?
CAGR means today in such times where the prices are going out of route, it is difficult to put a number. Since we have seen a growth of 65% in the overall last 1 year itself, which is like which is contributed by more than 40% by the price rise itself. So how the prices move in, that is very, very important for us going forward to decide the CAGR. But if you see a bunch of 5 years together for last maybe 5 years or even 10 years or 12 years, we have grown at a CAGR of about 18-19%. So and we wish to continue with that kind of CAGR going forward for if you want to look at 3-4 years time.
All right. Thank you so much, and congratulations.
Yeah.
Thank you. We take the next question from the line of Isha Gaul from CCIPL. Please go ahead.
Sir, I'm trying to understand that as you are saying that once the garment companies pass on this price increase, then it will be irreversible. Sir, it will be irreversible for the OEMs, that is the branded companies which are ultimately selling to the retail customer. But for the garment manufacturers, they will have to pass on if the cotton and yarn prices decrease. Then the OEMs, which are the brands, they will ask the garment manufacturers to pass it on to them, and they will keep the benefit themselves, the branded companies. Sir, so then how do it comes back to us that how are we saying that once these prices go up, then it will be irreversible for us? And so secondly, if you see the steel industry, sir, it's all about demand supply of the steel. They don't worry about the automobile industry, that what will happen to them if we increase steel prices. Even if iron ore prices are going up, the steel prices are determined by demand and supply of steel. Sir, so in that case, sir, so basically I am trying to understand that this 20-25 rupees gap that is there in the yarn realization, sir, by when will we be able to pass it on, whether it will happen this quarter or next quarter? Sir, what is in your judgment, when can we pass it on?
Yeah. First of all, would like to comment on your steel industry example. Steel industry has many usages apart from automobile industry. They have maybe 8 to 10 different kind of usages, whereas the textile industry has only one usage, that is for the cloth which is being worn, or maybe for home textile, which is related with the same itself, used like personal usage. So our usage for cotton is one single that ultimately it goes to the customer, which will use it for their own consumption. So that is why it is more, let's say, directly linked with the apparel price. So that is one part, and we cannot compare this with steel industry. As you gave example of steel industry, we see that once the cost of any parts or anything increases, we see the prices increase by most of the car companies. Like we have seen in the past so many years that the car prices have gone up by 20-30%. Whenever the raw material, whatever they have inflicted the increase on because of inflation. But when it comes down, nobody reduces the price. Maybe some discounts plus or minuses, but prices actually on the floor does not come down. Same is the case here, because we are seeing an unprecedented increase in the raw cotton prices, which is ultimately to be transferred to the customer. So what we are seeing is the farmer is getting today much better prices, but the in-between players like spinner, as well as weaver, finisher, garmenter, and retailer have to sacrifice some part of it if he is not able to pass on the price. Yes, due to demand-supply situation, a spinner was able to pass on completely the prices, barring last 1 or 2 months where there is a change in the scenario, slight change in the scenario. But weaver and finisher and garmenter were not able to pass on the kind of prices which they wanted to. So they are pushing the prices ahead. We have seen 2 increases of price increases by the retailers. We will see 1 more increase by the prices by the retailers. Once that price is passed on, then the retailer is quite comfortable to give it back to his garmenter or downstream. Yes, you are very right. When the prices of yarn will come down, he will also look at increasing his margins or retaining margins to the older level. But not that he will take up all the margin which is there because of the reduction in the cost. So this is a normal phenomena. You can see there are 4 pockets with the person. One is with spinner, one is with weaver or knitter, and one is with garmenter. So of course the money will come in these 4 pockets only. Maybe so it will ultimately come to textile industry. I'm not saying that the price increase is irreversible on part of a spinner or a weaver, but as a whole in the industry, this money will remain with them.
Okay, sir. And sir, also in the papers it came that in the first week of May, the yarn prices have been increased by 40 rupees. So this 20 to 25 rupee gap that you are talking about, sir, is it after that 40 rupees hike that happened in early May?
The prices on 30th of April was like when the cotton was about 92 or 93,000. At that point of time, this increase was happened. So this 40 rupees increase is after 1 month gap. In between, we have already increased the prices. So still, I'm not talking about today's prices. I'm not talking that today we need to increase the prices by 25 rupees. Yes, it is going to increase by another 4-5% going forward. And it is where we are seeing the increase happening regularly on a consistent basis.
Okay, sir. Thank you very much and best of luck.
Thank you.
Thank you. We take the next question from the line of Shrikant Sharma from Ishri Consultants Private Limited. Participants are requested to restrict their questions to 1 per participant. Over to you, sir.
Hello.
Yes.
First of all, congratulations for excellent numbers, sir. My question is that the garment industry is asking for the export ban of cotton. And on 17th May, I think, they will be having a meeting with Minister of Textiles. So how do you think the spinning mills will be affected, and specifically your company, Nitin Spinners, how it will be affected by a cotton ban, if there is a cotton ban? Export.
The ban is for the raw cotton exports, so which is being contemplated. I think it is too late because already most of the cotton, now our cotton prices in India are more than the international prices. And anyway, not much exports is happening. Only exports which was committed earlier with lower prices is happening at this point of time. So I don't foresee any impact happening because of this ban or anything else. And rather it will be detrimental overall to the sentiments in the global arena that we are inconsistent with our policies. That is one part. Anyway, it is not happening at all. As far as our company is concerned, we do not foresee any impact of this particular issue happening. And the meeting on 17th of May is for all the stakeholders of the industry, not only the garment one. This will be a meeting with the minister, with all the stakeholders, including the farmers, the ginners, the traders of the cotton, the multinationals of cotton, which are stocking the cotton in India, also spinners, along with garmenters, and also the downstream players in the apparel as well as the home textile industry.
Okay. Thank you so much, sir. Best of luck for the future.
Thank you. Ladies and gentlemen, due to time constraint, we are taking one last question from the line of Hiten Boreja from Joindre Capital. Please go ahead. So your line is unmuted. You may please go ahead. Mr. Hitin. There is no response from the line of Mr. Hitin. Thank you, ladies and gentlemen. Due to time constraint, that was the last question for today. I would now like to hand the conference over to Mr. Avanish Chandra for closing comments. Over to you, sir.
Congratulations, Dinesh and Maheshwarji, on continued strong performance. Since we are completely out of time, just one comment that in last 7-8 years we have kind of 4 times capacity now. So do we foresee the same kind of growth trajectory over next 5-6 years? Next 2 year picture is already you have talked about. So what should we expect? We can have the same kind of journey of last 7-8 years in next 4-5 years.
Maybe if you look at our history, we have been growing at 18-19% CAGR in revenue terms, not in capacity. I would not like to comment on capacity side. And we expect to continue this journey for foreseeable future of next 4-5 years at least. I hope we could multiply at the rate at what you mentioned just now, and it will be our endeavor to grow at that level, definitely. Everybody wants to grow. So that is something which we all aspire for and hope it fructifies us good for all of us. And also, I would like to thank everyone for joining in the call. And thank you, Avnishji and Smith's Capital, for hosting this call. I hope we have been able to answer most of the questions satisfactorily. However, should you need any further clarifications or like to know more about the company, please free to contact our finance team and our investor relationship advisors. And thank you once again taking out time and joining on this call.
Okay, sir. Thank you very much, Dinesh sir and Maheshwari sir, for spending your valuable time and providing us the opportunity to host the call. Over to Diksha.
Thank you. On behalf of Smiths Limited,